So where does America's largest health insurer go from here? Joining us now is John Ransom. He is Director of Healthcare Research at Raymond James. And here on set, Jeff Jonas, Portfolio Manager at Gabelli, managing their healthcare and wellness trust. And I assume, Jeff, because you're here, you are an owner of UNH?
We do.
And you're a believer in the company long term. How come?
I think they can turn this around. They get to reprice the majority of their insurance here at the end of the year. And they have a great franchise that's very diversified across a lot of different lines of business. So even though some of the government businesses are underperforming right now, they still have a great commercial franchise and still have a great Optum business that does some of the providers and service offerings.
Well, yeah, I don't know if we can ask John a question. John, yeah, there you are. So John Ransom, let's talk about it because there is a thought, and I know, Kelly, you had Bill Smead on your show yesterday.
Yes.
He was bullish on the stock as well.
He's sort of saying, look, how much worse can it get? This is a highly important company to the whole country, right? I mean, their membership rivals that of government health programs. So at some point, the government will.
So was Intel at one point. Yeah. So John Ransom, what do you think? Can it get worse?
Well, if you guys were talking about Britney Spears and Monsters and Field of Dreams, that was a lot more fun. Just wanted to say that. So to feel like the Grim Reaper here. So on United, there are just cheaper ways to play the recovery and Medicare Advantage. Humana, if you believe their out-year numbers, is about a 6 PE. CVS is kind of about an 8 PE if you believe in the recovery. The problem with United is even if they can claw all the way back to, say, $30 a share of earnings in a couple of 3 years, the stock's, 30-40% more expensive than similar stories out there. So there's a lot of cheap health insurers out there. United, even though the stock's down a lot, we think the buy side thinks the starting point in earnings this year will be in the teens. Maybe call it, we're at $20 a share, but we've heard lower numbers. So if we start at, say, 18, 19, maybe we're too high. To claw back to 30 in a couple of years, we just think the stock doesn't really offer that much value at the moment.
Jeff, what would you say to that?
Well, I'd agree actually on both fronts. First of all, I think we're expecting in that $18 to $20 range for their initial guidance. Probably something conservative, probably something they can grow significantly over the next couple of years. And I would agree that we kind of prefer Cigna, which doesn't have a lot of government exposure, or even Elevance, which is trading under 10 times earnings. So I'd agree on valuation. I mean, UnitedHealth is one of our smaller insurance company holdings.
I think it's just because, John, we don't know what the ultimate result of this investigation may be. I think that's the problem. I think if you buy the stock, and there are a lot of very positive things about the company, Bill Smead made them yesterday, Jeff's making a few now. But let's be honest, I think there is an element of rolling the dice here, is there not?
Yeah, so a couple things. The deeper point to me is, and how deep can you get on a financial channel, but, the company's got this one shot next week to reset the guide, but also to reset the strategy. And that's what I'm most interested in. Like what one of the businesses they're in, which is a $60 billion business, is where they take risk in Optum Health, not only for themselves, but for their competitors. And I just don't know if it makes sense. If Medicare Advantage is a 1-2% margin business now, does it continue to make sense to take risk for, say, Humana and lose money? You don't see Wells Fargo buying loans from JP Morgan and lose money on those loans. And that's kind of what's happening. So that's one line of business I'm really curious if the management looks at and says it just doesn't make sense with, the new Medicare Advantage. The other thing on the investigation itself, good reporting by the Wall Street. I talked to them at the time, and they said, look, two things can be true. The company can be under investigation and not know it, and that ended up being exactly correct. I didn't know why at the time they were so virulent in defending themselves when they just didn't know. So that was surprising. But look, the other thing about this issue is it's not going to be that they, I think, get investigated and pay a fine in a year, 18 months. It's really the behavior changes and the reputational issues that go along with this. So at the margin, do they code less aggressively? Are they less tough on prior authorizations? And when you have a 1-2% margin business, even small changes in this direction can have outsized changes in your earnings.